The first thing you need to know is that playing this earnings game is much harder than it looks. Although people think, hey, I can just get in this, I can do this, I have a computer. Listen to me. Companies are not horses with CEOs as jockeys and the enterprise is the horse. When you go to the track, you go to wager on winners. Now, unlike the ponies, there are lots of winners in this earnings season. In fact, we've got many more winners than losers, so you'd think it'd be easier than betting on a race. But that's not the case, though, because the winners tend to surprise you, while the losers just show up and no more. What defines a winner in this earnings period? Well, if we could do it with Google, wow, what a quarter. Take United Parcel, okay, with a stock that's vaulted more than 10% today. If you Google it, you'll see the stock that's up the most. Now, this was seemingly in response to an amazing set of numbers, right? That's what you think it was, right? That's what we heard all day. But that's not what drove up UPS at all. Sure, the gross margins were terrific. The pricing per package was unbelievably good. However, what you needed to know about UPS is that the new CEO, Carol Tomé, has repeatedly been dismissed on Wall Street as someone who wouldn't be able to tame the beast that is the unwieldy package delivery company with more than 400,000 employees. Now, it didn't matter that she's been on the board since 2003, so she knew what had gone wrong. It didn't matter that she was the dominant CFO of her time at Home Depot. Tomé came on our show after the last quarter, which was widely panned, right, and promised that from now on she'd beat all her targets. She said it was over. The missing was done. Well, that's exactly what she did. For many stocks, beating the numbers doesn't mean much. They'll do it all the time. Check out Procter & Gamble, Coca-Cola. Like, I beat the numbers. The numbers were better than expected. Stocks do nothing. In other words, UPS roared today because of the surprise factor. People betting against Carol Tomé. They were wrong. See, this is part of the reason why Alphabet soared tonight, too, when it reported an out-of-this-world top and bottom-line beat based on surprises in two divisions people think are no good, YouTube and the endlessly underrated Google Cloud, which I keep telling you is good. But Microsoft got hit when it delivered a very good quarter that was better than expected, but not insanely better, because of the overrating of its cloud, which only grew at 50%, just matching the previous quarter. See, it's surprise. What matters is the game is harder than it looks, because of the surprise factor. Everyone knew that Microsoft would have excellent results, whereas lots of investors simply couldn't imagine Alphabet doing this well, even with its advertising business making an incredible comeback courtesy of the great reopening. In short, you want to look for situations where you believe the CEO, but you know lots of others don't. And you want to believe that key business lines will be sharply better than expected, but others don't believe so. Now, you know what? I think you got another one coming up. I think you got the setup exactly right when you're thinking about Apple tomorrow. See, Tim Cook's a chronically underestimated CEO with a mosaic of businesses, cell phones, wearables, computers, the service revenue stream, all under one roof. The secret sauce? For the last 20-odd years, Apple's been a consumer-oriented tech company, with a few notable exceptions. They've been shut out of the enterprise. Now, though, they've got it in. The rise of remote work is basically a Trojan horse for Apple, because so many senior executives use Apple machines at home. And for the last year, their home has been their office. You think I'm any different? You think I don't have Apple at home? But this is what you get, okay? Because this is the enterprise. You think I want Apple here? Yeah, but you see, it's the enterprise. Oddly, I suspect Facebook's got a similar situation. They're obviously not good. They're Apple's polar opposite when it comes to privacy. When Apple decided to allow its users to opt out of tracking, Facebook slammed them for hurting small business. Yeah. Bar San Miguel's tracking everybody in the world. While I like Facebook and genuinely appreciate what they've done for small business, that argument's totally disingenuous. Small business doesn't track our online behavior, for heaven's sake. But the endless fouls called against Facebook gives you an opportunity to buy the stock at a discount, as long as Facebook doesn't cite Apple's policy as a reason to cut a forecast. I'm betting they won't, although when it comes to Facebook, anything's possible.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.